Well, here we go, the video that you guys have all been waiting for. DraftKings Q3 smashed once again. And I think it's now that we're taking it for granted how good these earnings have come from DraftKings. You know, we have got used to DraftKings doing 10 out of 10, 11 out of 10 earnings every single quarter now. And the fact that they're not only regularly pulling in these absolute amazing earnings, and it's probably arguably the best, once again, the best public company reporting earnings from earnings season. I don't think I've seen another company post as good earnings as what DraftKings have done this earnings season and for the last couple. And sometimes you take that for granted how good this has come now from DraftKings to be the norm of how much they're smashing their earnings, you know, from an EPS beat, from a revenue beat. And then you look at the guidance, the triple beats they've been putting in for the last few years or quarters now especially, you know, they've been absolutely amazing. So yeah, well done to any of you guys that were holding this stock going into these earnings, because once again, absolutely amazing. Congrats to Jason Parks, Jason Robbins, once again putting in these fantastic numbers for this company. Before we get stuck onto the earnings review, I just want to say two things. First of all, thank you for all the nice comments in the last video. There was so many nice comments I posted there. I thought I'll just give all you guys a shout out at the start of this video, so thank you once again. And second of all, I did just post an exclusive video on Patreon, which was the PayPal earnings review. So it's exactly the same style as this DraftKings video, but on the Patreon. So if you do want to see that exclusive video, join through the link in the description. You get 2 exclusive videos a week and also my live buy and sell alerts. And you support the channel so I can make this free content for you guys like this DraftKings review. So if you do want to go join that, link is in the description. But let's get on to these DraftKings earnings, and once again an absolute smash on Q3. So 2 points I want to point out. So first of all, last year, believe it or not, you know, we're only going 12 months ago now, we had our Q3 in 2022. And I remember that day when I looked at those earnings, and once again, they were as good as earnings as these earnings, and yet the stock was down like 27%, I believe, on those earnings. And it just shows you sometimes like the momentum and the sentiment of the market is crazy. You know, last 12 months ago, we were talking about this stock being $11, and nothing has really changed with the business that much. I mean, financially, they were performing amazing 12 months ago. Financially now, they're performing amazing. But just because the sentiment's changed in the market, all of a sudden, when this was $11 12 months ago, everybody was saying that this was a terrible stock. And I've got the comments on the video from the Q3 earnings, you know, back in 2022. I've got the comments on the video, like everyone calling DraftKings a terrible company. And you know, 12 months later, we've gone from $11 all the way, you know, we're at nearly 52-week highs. The stock's up over 200% this year, and it just shows you how quickly things can turn around in the market. And you know, for any of you guys that were taking advantage of that stock when it was $11, you know, congratulations to you guys, because you know, you need to have big coconuts to and maybe not big coconuts, but big a word that I can't say, otherwise I'll get demonetized, to go buy that dip at $11. And you know, you deserve the returns you're getting right now for buying that dip. So well done to you guys. And the last thing as well is, you know, the stock had a really good day. It was up 16% on Friday. I think I said on the video on Friday, like, I think the stock was up at the time, I think pre-market it was 7%. I think by the time I made the video on Friday, it was up like 10 or something percent. And I was saying like this stock should be at 52 highs, and then as the day went on, the rally did push it up to near 52 highs, which is well deserved. And it's good to see a stock actually reflecting off earnings. You know, if you have a company that has just done these earnings, triple beat, EPS beat, revenue beat, your guidance is absolutely amazing, you should see your stock at 52-week highs. And we haven't, sometimes we've seen it in these earnings where companies have been bringing out good earnings and it hasn't reflected on the share price. We saw it a year ago where they brought out good earnings and it wasn't reflected on the share price. It was rewarded with a 27% dip. You know, it was good to see the stock actually get the reflection on the share price, because that's, and I think that's broken a few people in the last 12 months, is seeing all these stocks do financially amazing and they don't get rewarded on the share price. And it was good to see finally a stock get reflected on the share price of the earnings that it's doing and the good earnings that it's doing. It was quite funny because I tried to go in this week on earnings season, trying to think from, you know, 12 months ago, like, don't look at the share price, look at the fundamentals, and if the fundamentals are good, keep holding the business or even keep buying the business. And that's what I said to myself 12 months ago when the stock was $11 and they were bringing out financially, you know, 11 out of 10 earnings, and the stock was going down to $11. It was tough to keep saying to yourself, like, don't worry, it's going to be reflected eventually and on the share price point of view. And we do have that now. And I said that to myself again before these earnings, that if the share price does go down on good earnings, don't beat yourself up too much about it. And once again, it was good to see actually this time a good earnings report will get reflected in the share price. I think that's what us shareholders deserve a little bit at the moment that we haven't had for the last 2 years as well. So yeah, obviously good move on the share price point of view as well. But the best thing is fundamentally this was a great quarter. So when we look at it at the moment here, revenue 790 million versus 689 million expected. That is just insane. For a company to be coming nearly over 100 million beat on the revenue guidance, you're beating by over 10% on the guidance. It's insane. It's insane. Like, this should not happen. It should not happen, but it is happening. This is unbelievably good. Obviously 57%, I believe that growth that turns into. EPS negative 0.61 versus the negative 0.7 that was predicted, 70. Once again, very good beat on the EPS. We're not only just getting the revenue growth, we're getting the EPS beats as well coming in here. Net loss now 286 million versus 455 million. That's once again a really good improvement. All these people saying the company can't drag towards profitability. It's happening now, and this is on their biggest spend quarter. This is a time where there's all the new customers to acquire for the start of the NFL season. So this is, when you look at the last quarter, you see those losses were way down. So I would expect as well, once we get into the other quarters, we should see them net losses as well improving massively. This was probably the most impressive part, I think, in the whole earnings report, is that sales and marketing went from 372 million down to 313 million. So not only were they holding their marketing and increasing their revenue rapidly, they actually brought their marketing down by nearly 20%, and yet the growth was once again insane. I remember, maybe not a year ago, but maybe a year and a half ago, 2 years ago, there was a lot of people that were negative on DraftKings because they said they're only growing because of sales and marketing. They're only going up. The revenue only looks so good because marketing keeps going up, and it's supported by this. But people didn't realize at the time that was just because there was so many new state launches. Now there isn't as many state launches, and all them old state launches now are profitable states. And also marketing from point of view is that they don't have to target individual states now. They can do the national advertising point of view. People didn't realize this, and it was a bit of a mistake from their point of view. But I can't even count. There was so many times I said that people are not realizing this, and once again it was evidence here like how good it is, and it's even better than what I thought. The fact that they are now pulling marketing spend back and they're growing at these sort of levels, that is so good. That was a highlight for me, how good that was. G&A came from 186 million down to 130 million, so the company's getting way more efficient. So Jason Parks over there is doing a fantastic job as a CFO managing these costs to not only keep them steady and growing this much, they're bringing them down, and it's so good. When you look at the Q4 guidance as well, 200 million in EBITDA forecast, that'll be insane. I mean, at the start of the year were we talking about break even, was it? And now we're at the point of view where we're talking 200 million in EBITDA. That's absolutely insane. 2023 revenue now to be 3.65 billion compared to 3.5 billion expected. I mean, at the start of the year, I can't even remember what it was. Was it like 3.2 billion expected at the start of the year? That's unbelievable how much that revenue has increased as the year's gone on. 2024, we're expecting now 465 billion versus 4.2 billion the analysts were expecting. I think I said this at the I think I did an earnings preview at the start of the week, and I said this number that analysts are forecasting, it's not going to happen. It's not going to happen. It's going to be a lot higher than that. And this was the first sign of that it's going to be a lot higher. So really, you're talking about a 10% increase in your 2024 revenue. That's absolutely crazy. Realistically, I will expect them to actually come into a 5 billion by the end of next year. So I think this is going to get hiked up as the year goes on. Something to watch out for. Most of my predictions on DraftKings have been pretty much spot on. So I would expect them once again to go up to a 5 billion company by the end of 2024. So that's got a lot more room for improvement. They said EBITDA for 2024 is going to be 400 million. I think this is once again, we're talking potentially 200 million in Q4. I think we're going to be way ahead of 400 million. I think we're going to be towards 500 and 600 million in EBITDA. What I would say is I think they're hiding profitability here. I think we're going to see the word the profit mentioned a lot more than what people are expecting. I potentially think we could hit profitability in 2024. Not in 2024, in Q4 2023. I think DraftKings could sneak a profit next quarter. And I don't think they're keeping it on the down low, but I would not be too surprised if they hit profitability next quarter. What I will say is in 2024, once again, I think they're hiding that I actually think DraftKings could come profitable in 2024. So we'll see what happens. Obviously, they're adjusted EBITDA profitable. Obviously, the cash burn isn't happening anymore, which I think I've put down somewhere over here. So I'll get onto the cash position in a little bit because they're not burning cash anymore now from an EBITDA point of view. So I think there's a lot of, even though the numbers were hiked up a lot, I think there's still a lot of hiding of how good that revenue is going to be, how good the EBITDA is going to be, and profitability I think is going to surprise a few people in the next 12 months as well on this company as well. Conference call, a few things that I pointed out here or that I saw and I'll point out for you guys. North Carolina launch is coming. That'll be very, very good. Maine launch is coming as well. They now have 45% of the population have access to a sportsbook. So even the US population now still have 50% of the market still to go for. So the growth is still very much available at the moment for DraftKings in the next 4 or 5 years. 11% have iGaming. I think iGaming has been massively slept on, how big of a market that's going to be. I think that once this starts ramping up towards 20-30%, that's going to be a major improvement because GNOG's done very well for them. As well as that, you look at the profitability that you make from iGaming is a lot more than sports betting as well. So that's going to be a major drive for the company as well in the next few years that people are sleeping on as well. And I think actually Jason Robbins mentioned that quite a few times in the conference call. Monthly active users up 40%. Once again, good growth there. Average revenue per user, once again, growing. I don't know how long they can keep growing that out. The fact that people are still spending. This is how good the DraftKings platform is that people keep spending more and more money with the platform. So, I mean, I don't know how long they can carry on growing that for, but that was once again very good. They are going to do a multi-year outlook at their Investor Day. So they're going to do an Investor Day on the 14th of November, and they're going to set what a multi-year outlook there. What I said on the earnings preview on Monday, I believe it was, I said that I think that this conference call they're not going to answer too many questions in detail because I think they're going to save it for the Investors Day, and that was clear once again. I think Jason Robbins even at one point said I can't say too much information because otherwise the PR team's going to tell me off because I need to say it for the Investor Day. There's going to be a lot of good information there. I'm looking forward to that. That's Tuesday, not the week coming up, the week after. I think there'll be a lot of good information in that Investor Day, and they're going to set a multi-year outlook. You've got to be careful. I think they've got to be careful when they do this multi-year outlook. I hope they don't do a year by year kind of. This is what we expect in 24, 25, 26, 27, 28. Because if you have a bit of a rough year, it can sting you because you look back at your longer term outlook and you go, oh, you're expecting to do this year and this year. What I'd like DraftKings to do is when they set a multi-year outlook is that they set a medium term target. So a medium term target being 3 or 4 years, and their target is to reach 10. Let's say their longer term revenue target is 10 billion in revenue, which is what I actually predicted 2 years ago that they would do 10 billion in that time frame of revenue. So they set that target out, and then they say, and we expect to do 800 million in 1.5 billion in EBITDA in that time frame. That's what I hope they set themselves out for, is a bit more of a medium term target rather than year by year, so they don't have too much pressure to hit targets year by year, which I think sometimes some companies can stitch themselves up by doing them sort of targets. So we'll see what happens. Those are the kind of the targets I'm expecting. I'm expecting somewhere around that 10 billion in revenue target, but they might lowball it a little bit, but that's realistically where that's where I thought they would get to about 2 years ago. I mean, obviously I would expect them to be pushing towards $1 billion in EBITDA by that point of view. Obviously by then we should be seeing we should see profitability. I mean, how much profitability they should do, we'll see. I mean, realistically, they could be putting towards 400, 500 million in profit by then. So we'll see what they guide for anyway. That's just me speculating. They said that next year they're going to be cash flow positive in 2024 for the people that do focus on cash flow. They said that they now have the number one product in and market share, which obviously I think I mentioned on the YouTube channel about 3 weeks ago that happened. So yeah, once again, they've really focused on the product and it's now the number one platform out there, which is obviously great. They said that states are getting profitable faster. So we heard a while ago that states were getting profitable in 2 to 3 years. Then we were starting to see states come profitable in 2 years. Then we were starting to see states come profitable in 1 to 2 years. So now they're saying that states are now getting even more profitable after being launched. Maybe we're seeing states come profitable in between 6 months to 1.5 years. I mean, it'd be good to get some clarity on maybe the investor day there. But yeah, it seems like once again, because of the national advertising now, they don't really need to increase the marketing that much. That all the advertising that's there automatically gets people onto the platform, and it's kind of that cycle now where they've matured that much. The cost efficiencies are kicking in, which is obviously really good. They said that they're going to end in, I think it must have been this year. But I think they said they're going to finish with 1.2 billion in cash, which means that basically the company's not burning through, going forward, shouldn't really burn through that much cash. This is really good because if any of you guys that have been watching DraftKings or been watching my videos on DraftKings for like the last 1 or 2 years, we were originally told they would probably have about 300, 400 million of cash when they start turning, when they don't burn the cash anymore. And then it went up to like 500 million, then 600 million, then 700 million. Looks like we could be more towards the 1 billion mark now when they actually turn, where they don't burn through the cash anymore. 1 billion of cash is a really, really healthy cash balance. And obviously, if they start generating cash going forward, I mean, your options there, obviously, they potentially could look at acquisitions. They actually mentioned on the conference call share buybacks. I mean, I would be happy for them to, put in, a 50 million buyback every year, offset that stock-based compensation that they do have. I mean, I'd be really happy for them to do that, but we'll see what happens. So, but obviously that's fantastic. That balance sheet's going to be, a lot stronger than what we thought it were going to be, a few years ago. Gross margins improved at the moment by 300 basis points. They're expecting next year a 200 basis points improvement in gross margins. So we should be pushing towards the 50% range very, very soon, which is what my long-term target was for DraftKings, is to push towards a 50% gross margin. Hopefully from there they can achieve a 10% profit margin, which is my longer-term target from them. Once again, they're hitting everything that I expected them to do, which is fantastic. Once again, I put here share buybacks. I think realistically, if that is going to happen, it would be 2025. They said that on the conference call, there is no, at the moment, plan for expansion. They feel like they've still got so much of the US market to go, and I agree. But I was wondering if potentially they do expand to the whole of Canada. Do they look at potentially Mexico? But it sounds like that's something they're not considering at the moment, which I think when you look at the potential market share they have to go for, still have to go for it, it is fantastic. Obviously, the big difference, I'm going to move to this side now, the big thing that we're all going to be looking at is the ESPN. So ESPN are going to launch their product in the next 2 weeks. Obviously, what impact is that going to have on DraftKings? We'll see. We know that they're going to flog a lot of promotions out there. Do we see a few users that do kind of go to that platform, take the the sign-up bonus? But ultimately, like Jason Robbins was saying, they're going to go to the best product in the longer term, and we think that's going to be us, so we'll be able to manage it. And at the end of the day, we've seen, ESPN, not ESPN, but we've seen, Penn National before. They bought Barstool Sports and it flopped. So just having a different name and sticking it back on Penn National, if they do things similar or exactly the same as before, it should flop. So the only way they're going to actually cause DraftKings a major issue is if the product is massively improved, which I don't think they would have been able to do in 3 months' time since they closed the Barstool Sports platform. So I don't think it'll be too much of an issue, but we could see in the short term a bit of wobble on the user side of it, as a few of them do switch to ESPN for sign-ups. But once again, from an ESPN point of view, it won't be or financial point of view, there's only so long you can give ridiculous promotions and you end up, with major amounts of losses. So it's not sustainable for them to do that for the long term either. So I think that it's something that should be okay in the longer term. It's something that DraftKings will have to deal with in Q4 and especially into Q1. That's going to be something to keep an eye on if we see some sort of little bit of a dip in some numbers. But yeah, I mean, overall, the Investor Day was what I'm really looking forward to the most, and seeing what they say on there for longer term targets. But from this quarter here, once, as you can see, and what I mentioned, it's 11 out of 10. The Q3 beat, the guidance they're giving for 2024, the numbers they're doing here, the future still looks absolutely fantastic for the company in the next few years. It looks really positive. Obviously, it's keep an eye on that ESPN. What's going on over there, but apart from that, it looks very good. And if you've been a shareholder and you've had to put up with the days of this going down on fantastic earnings down to $11 and dropping 27% for no reason, it was absolutely stupid. And now you're starting to see the stock actually starting to go up on good earnings, and obviously we're heading towards 52 highs. Well done for you guys. It's been tough. It's been tough, and you deserve it. And realistically now, if they do these numbers and carry on improving how they're doing, and we start seeing the stock market having a bit more of a bullish sentiment around it, realistically, we will see DraftKings in 2024, hopefully, start pushing into the $40 range. Maybe we even see 50. So it's just exciting times, really. It's exciting times to be a shareholder, which is great. So yeah, well done to you guys for holding through all of it. And if you were buying at $11, well done to you guys. Thanks for watching. Hope the review was useful. Hit the like button if you watched the video all the way to the end as well. Helps support the channel and it helps the video get out there. And subscribe if you're new around here. And I'll see you in a bit.